Hey everyone, starting this evening live stream a little bit early today, but that's because already now's a great time to get into it. So first of all, U.S. small businesses are pulling back for a fourth straight month in a row. Their hiring plans, just 11% of small businesses expecting to add workers. Now this doesn't necessarily mean we're going to get a weak jobs report because Goldman Sachs is suggesting that elevated immigration is boosting our labor supply by about 80,000 per month. And we expect a continued tailwind of about 50,000 per month. Now, they're suggesting elevated immigration. Others are quoting this and saying illegal immigration. It's not entirely clear which it is, but do know that the payrolls report can count people who don't necessarily have documentation, and the household report usually misses those folks. So employers say, yeah, I got this many employees, whereas individuals who often don't want to appear sort of on the radar, won't respond to anything, obviously, official. So the households report could potentially miss these. Now, the Wall Street Journal thinks that's one of the reasons why the households report has been coming in low. Bloomberg responds to this and goes, no, it doesn't really matter. The economy's, underlyingly strong at the moment anyway. But we should be paying attention to the households report, because if we are starting to get a weakening in the households data, including or not including illegal immigration, then ultimately we probably need to make sure we cut rates. So this is sort of the debate that's going on. It's like, are jobs weakening or not? Well, that's part of the reason why we had a sell-off today, because nobody really knows what the hell is going on. So what happened? Why in the last hour and a half did we get this crazy sell-off today? By the way, we made some money on a great put option today. I think on the day we're up like $8,000 to $9,000, something like that, which is pretty cool. If you want all those buy-sell alerts, remember to join the Stocks Insight group or email us at staff@mekevin.com. But wow, I was not expecting this much of a sell-off into the close. I was expecting some form of a sell-off, mostly just because usually what you get the day before data is you get hedging or just trimming and hedging, so that way if things go up, cool, most of your money's up. If things go down, you have a little bit of money to go buy the dip the next day. Obviously, tomorrow we're expecting the jobs report, so we can try to figure out, okay, what direction are we actually going with this data? So this is very difficult, and it's hard for a lot of people to comprehend. A lot of people, they listen to this kind of stuff, and they think, oh my gosh, Kevin's flip-flopping, whatever. It is true. I've been bearish the last 3.5 weeks, but I've been bullish for the 14, 15 months before that. But I've only been bearish the last 3.5 weeks because the data has started coming in bearishly. Hopefully tomorrow we get a great report, but if we get a bad report, then it's just going to reiterate what Neil Kashkari said today. He says, look, if inflation continues to move sideways, then it would make me question whether we need to do rate cuts at all. He called January and February's data a little bit concerning. Fed Mester says maybe June is what she implied in her talk. I broke this all down on ehack.com. Goolsby wants to focus on housing. The problem is the turnover for housing is very slow to actually get that sort of rental data to show up in owner's equivalent rent. It's going to take a long time to actually showcase that rents are starting to soften. It takes a very long time. Hawker, he mentions that we're not where we need to be, and that, quite frankly, inflation is still too high. Not great. Then we've got the former NY Fed President Dudley, who says, look, 3 rate cuts isn't out of the realm of possibility, but the odds are we might be above the 2.6% long-term target for the Fed funds rate on an inflation level for a while to come. Especially with Brent now breaking out above $90, that's going to add to headline inflation. The Fed's going to pay attention to that. We're now over $91, excuse me. And as a result of some of this pain, you're seeing some of the international indices start rotating down as well. You'll actually notice the Nikkei 225 is down about 2%. And their market is just now in progress. They've been open for a few hours now. So you're seeing some pain here. So Tesla just dropped its financing rate again. You're down to 6.39% right now for a 720 credit score. That's, I believe, I haven't fact-checked it. I'm going to go fact-check it myself right now. So I'm just going to run over to Tesla vehicles. I'll do a quick little custom order or whatever. Let's just see. Keep in mind, I think if Elon wants to go, lean right with his opinions, maybe that could be okay if, quite frankly, if he wants to go right, cozy up to Trump and get Trump to stop bagging on EVs. But remember what you have. People who are watching Trump are listening to Trump bag on how terrible EVs are every day. And, Obviously, Elon Musk goes off on Biden almost daily. It was just earlier today, he goes off on Biden and says Biden doesn't know what he's doing. Now, you might agree. You might agree Trump is the right answer. You might agree Biden doesn't know what he's doing. But guess who's buying the EV? Anyway, we don't need to go down the road. The point is, Tesla did just drop their financing rate to 6.39% APR for 72 months. So you did see an adjustment down in some of those rates. That does probably lead to more cost for Tesla, especially since the 10 years sitting at about 4.32. That is a smidge down from the last couple days, but over the last 3 or 4 months, it's the highest level. Actually, we are at levels we have not seen since November 27th, so since Thanksgiving. So we're at a higher level now since Thanksgiving. Yeah, a couple days ago we were like 11 basis points higher, but we were way lower before that. So now you're starting to get a reduction in some of these costs again on interest rate buy downs for some of these vehicles. Not uncommon. It's a great way to motivate vehicle sales, obviously. I have a little bit of trouble just, I keep listening to bull theses, and I'm just like, okay, whatever. I compare with the data, and I'm just not seeing what some of these folks are seeing. Somebody was debating me on the main channel. I made a video that you should watch on the main channel. I think it was pretty important. It has to do with the Fed and housing and kind of where I see housing going. And the individual commented and suggested that housing, where was it? Sorry, but I work in construction in California, and let me tell you, new housing is going up all over the place, especially affordable housing projects. It's basically saying, hey, we're building a lot. And my response is, working in construction provides a great anecdote, but that's not data. Texas, let's be real about Texas versus California. Texas built 300% more homes than California did last year. And Texas has an 11% smaller population. So you're basically adjusted building like, probably like 330% more, 333% more housing in Texas per person than you are in California. It's ridiculous. Like, California is an inflation hedge, a real estate hedge, because they just don't build. The policies are stupid. They should build more. I ran for governor on that idea, but they don't. So what does it do? It protects your real estate values. So great. Do have a little bit of dropping here in Enphase in the post market. I saw one of your comments on this. And then BTC is back down under its breakout. It's actually breaking out there for a moment. You can see not only did it break out of this long trend here that we've been watching, which we were under for a while, but it ended up getting rejected by its all-time or previous all-time high of about 69K. So now we're kind of wondering, what way is the data going to go tomorrow? If we get good data tomorrow, hey, we're off to the races. But if we get bad data tomorrow, we are on glass foundations. Not great. Glass foundations. That's what I think we're on. So look, there's a look. I run a fund. I'm not going to mention it. This isn't an ad for it. I'm just saying there's a reason we're like 34% cash. So we can buy the crap out of the dip. Okay? Just saying. Anyway, so, okay, good. So, what else do we have? Then we have, let's see here. Tesla, let's see here. I see some of your comments here. Jobs report 5:30 tomorrow. That's the thing. 5:30 tomorrow, you're exactly right. That's going to be very interesting. So, we'll see how it goes. That's going to be the jobs report. That's a big tell. And that'll be a big deal. So as far as oh, you're right. Actually, I think I screwed up the percentage there. You're about 30% smaller in population. It's probably more like 25% smaller in population. By some measures, you've got about 29 mil in Texas and 39 in California. So maybe closer to 11 mil when you kind of look at the rounding there. Either way, the point is there are a lot more people in California, and they're building a whole lot more in Texas. So it just sort of exacerbates the argument. But you're right, it would be more than 11%. So thanks for that correction. But anyway, with that said, let's take a look at some of the other things going on. So we talked Fed speak. Not only did we touch on Fed speak, but we touched on oil. We talked on jobs. We saw initial claims this morning. The Palantir partnership ended up leading the stock to go red at the end of the day, mostly because everything really sold off in a hedging move. And then we talked about small business hiring. We do continue to see tensions in the Middle East, with Biden now suggesting that, hey, the only way we're going to continue to provide support is if you actually ensure the safety of civilians. This is obviously a slam on the aid workers who got killed Rightfully so. I mean, some people are highly concerned how marked aid workers in coordination with the military could accidentally be targeted. That's scary. Should be scary for everybody. Now, just sort of like pointing out on both sides, some people say, look, Israel needs to do this to eliminate Hamas and prevent an attack from ever happening again. We had nearly 300 people killed in Israel. It was absolutely terrible. But you flip that around, and now we're at not 10 times as many Gazan deaths, but 100 times as many deaths in Gaza from the counterattack. So the 100 to 1 ratio is leading to outcries around the world that maybe the response is disproportionate. It's sort of like, okay, the Taliban, let's say, live in Afghanistan or Pakistan or Iraq, whatever, wherever they might be. Let's just nuke the entire country. Okay, it's challenging. So, I mean, there are arguments, obviously, on both sides. Hedge fund what is this? Let's see. Hedge fund Bitcoin net total divided by futures length. Okay, so we're seeing hedge funds exposure to Bitcoin start rotating down. Is that right? Hedge fund Bitcoin net total divided by futures. Let's see here. Funds. Let's see here. I'm trying to understand their chart here. I'm gonna have to study this a little bit because I think the way they label this might be a little inaccurate. So ignore what I just said about the hedge funds. I'll get to the bottom of that, and then we'll talk about that tomorrow. Okay, good. So what else do we have? Then we've got Apple apparently ended up laying off 600 people when they cut their car building program. Not a surprise. It was quiet for a while. Ended up coming out. Then we did end up hearing that Samsung's profit rebounded sharply in the first quarter. That's thanks in part due to memory chip demand. Full earnings will get broken down on April 30th, but DRAM producers are now increasing prices by 7 to 10% in the first quarter as inventory normalizes for smartphones and PCs. There are some concerns that some of these DRAM chips are going to end up leading to an inflationary impact since they're just in so many products, and you just sort of slowly start seeing that inflation creep back. I've never been, up until really January's data, the person that's like, oh yeah, we're going to have the next wave of inflation. It's sort of something that I hadn't seen coming. I didn't see in the data. I wasn't expecting in the data, but I've always been vigilant for. And I really hate to say it, but like I am seeing that data of that sort of second wave brewing. And so I'm substantially more concerned than I was in January. Hence, obviously, my positioning the last, 3 weeks. Anyway, so, okay, then I just lost power on something. That'll come back. Hopefully we're still live. Your backup battery turning on. Anyway, so, okay, then we touched on hiring. There was a little bit, okay, we talked Elon Musk a little bit. We talked, I think that is almost it. Elon was pitching how cheap it is to advertise on X. About 3 cents per click was his suggestion. We're going to end up trying that out with just the ad credits that we do have there. And we'll report back to see if that ends up being true in terms of how that gets spent. Futures right now looking relatively flat and stable. Gold fell 1%. It's back under 2,300. Brent knocking on the door now of 91. It just fell a few pennies, so it's just under 91 at this point in time. And then, of course, watching what BTC does overnight. But I think everything's really just going to come down to data in the morning. Data is going to drive this. If data comes in weak, yes, TMF will skyrocket. The stock market will skyrocket, everything. What you just don't want is hot wage gains. That's the number tomorrow. Hot wage gains cause some really big problems. Coerce says the fear and greed index has now fallen to 49. And I'm checking that. You're right. Ooh, it just fell to neutral. How exciting. Oh, what a plummet today. Wow, that's a rapid plummet, and it just makes me worry that could this be sort of the start of a sell-off? If we get a bad report tomorrow, the answer will be yes. If we get a bad report tomorrow and a bad CPI report, we're screwed. If we get 2 good reports in a row, could be okay. So we'll see what happens. All right. Yeah, 2-week could also be a problem. I know. Well, that's unlikely with the unemployment, but yes, if we get a jobs number that's very, very low, that would be a recessionary indicator, which would be a rapid interest rate indicator. You would see yields plummet. You'd see people buy bonds. Interest rate sensitives might actually do well. Neil Kashkari, yeah, I actually agree with his hawkish comments. I am nervous about the January-February numbers I saw. Yes, he is correct. No, haven't bought Tesla shares back yet. I'll send an alert to everybody in the Stocks and Psychology of Money group when I do. Number projections, yeah, data dependent. I mean, I think that's exactly what you ought to be right now. The jobs report 1 month from now is guaranteed to be terrible. California, 25% fast food wage. Exactly. So we actually covered that yesterday. That is projected to raise the ECI by about 0.2%, which annualizes to an over 4.5% wage inflation rate. And that'll be in the second quarter because this just took effect April 1st. So yes, you are correct, LV. That is going to be a big potential problem. Brian, yes, data dependent. The Fed's all over the place right now, pissing me off a little bit. A savings account just dropped APY. Could this be an indication of rate cuts coming? Theoretically, you've seen Apple do this now. Goldman, I think, did this. You've got a few various different financial institutions cutting rates. It could be in anticipation of rate cuts coming from the Fed, or it could just be that, they're trying to squeeze some profit out of you, and then they're doing that under the guise of, well, rate cuts are coming anyway. Anyway, remember tomorrow, change in non-farm payrolls. We're looking for 214,000. We're looking for 0.3 on that month-over-month estimate. It will be out at 5:30 a.m. in the morning, and of course, we are going to be covering it right here live on this channel. So I'm going to title it right now, Critical Jobs Report, a live stream it's actually 4/5/2024. And we're going to set that. We'll probably go live at 5:25 a.m. tomorrow morning. And that way we are live a little bit early for that jobs report. I might be up a little bit even earlier than that just because, I'm up earlier than that always. But I might actually start streaming a little bit earlier because it is so important. If you haven't yet seen the update we did with House Hack, make sure you check out the House Hack update. We posted a full House Hack video update at the House Hack Homes YouTube channel, so be sure to check that out. And then, of course, remember we've got that coupon expiring for the Stocks and Psych group. That's Friday. Okay, now let's see what other commentary we have here. At the end of this live stream, by the way, you're also going to get a redirect link to set yourself a reminder to attend the jobs live stream tomorrow. So that redirect has been set. Okay, so let's see here. How will the news affect House Hack strategy? 0? The House Hack strategy is pretty solid right now. Made a little chat on shorting QQQ. Nice job. The triple short QQQ. I was thinking about getting calls on that sucker. I so wish I did. I was like, go do it. And I'm like, do shit. I'll make a video on Kathy's $2,000 price target. In terms of miners killed by Hamas in Israel, it's at least 1 to 350. Yep. 38 Israeli children were killed and at least 14,000 Palestinian children were killed. Yes. You're right. And I personally find that very, very ugly and disgusting. I am such a fan of children and the innocence of children, and it breaks my heart. Could you see yourself being biased, seeing you are heavy in cash, hoping to buy back several stocks cheaper? Of course. I mean, I try my best to limit my bias, and that's why I'm transparent. I just anytime I see a data change and my opinion changes, I tell everyone, so that way people know what my bias is. I try to minimize that, but I do my best. Okay, good. So then we got the market tank. End of the day was wild. Yes, that was. We have pictures of the adorable babies. We'll have to get some more. I'll bring some more. Summer's doing well. Thank you for asking. Hopefully she comes back within the next 2 days. Other babies are good. I think Jack is feeling a little unwell right now, but there's always some kid who's a little sad in the day. Crushed the end face put before you did. Made 120%, but didn't have as deep as a pocket. That's funny. Well, good for you, Charlie. Yeah, the end face put that was money. That was good. That was a nice That was a nice, what was it, like an 80% or something like that? No, I don't actually remember. I can't remember how much we put into it. But anyways, this was like 8 or 9K, something like that. We've seen the inflationary earnings reports as well, or just CPI? Well, I guess it depends which company you're looking at. You know, in the artificial intelligence space, the data center space, obviously you're seeing prices go up. I'm not really seeing the inflation on the goods side in earnings reports. You have to be careful because if you only look at goods, you're missing what's going on in services. And that's a little harder to get earnings calls for. So do you follow Trueflation? No, they're generally really off. What is it right now? I mean, if I just go to Twitter, they usually post the Trueflation report. But yeah, usually you don't watch it. But let's see here. Right now, oh wow, they went up about 0.5%. April 4th, they saw it at 1.96. Yeah, well, they were at like 1.4, I thought, just a little bit ago. But I don't know. I'd have to check the chart on that. I know Atlanta Fed came out with a new GDP report. I think Atlanta Fed dropped their GDP estimate slightly now to 2.5% on that latest ISM data that came out. They were at 2.8%, but we're still well above that 2% level. Feel better, Jack. Keep fighting summer. Thank you so much. Yeah, pain for children just, it makes me want to cry. Like, it breaks my heart. Children don't deserve pain anywhere around the world. Anywhere. Anyone's children. I can never justify that. Anyway, you're never going to make everyone happy with your moves, but let's be real. You've done well. Well, thank you for that. So, Nowcast Core and Headline PC looking pretty decent, to be honest. Yeah, we'll see when the real numbers come out. You ever come to MD? First rounds on me. Well, thanks, man. Appreciate that. Services prices paid came in okay this week. That's right. You're referring to the ISM number on Thursday. Yeah. So we got to see how that actually translates to actual CPI next week. And then, of course, remember, services prices paid is different from wages paid, right? Like, you could literally have everything else deflating, but if wages are going up, you run too fast, you run the risk of that wage price spiral. Yep. Would like to hear from Lauren to see how she's handling her kids. You know, we should do a video with Lauren. I think that'd be really funny. Funny. It should be really, really fun is what I meant to say. Although maybe it'd be funny too, because we get to make jokes together. Anyway, so that's what I've got for tonight's news update. It's really heavily predicated on tomorrow, so I want to keep it a little shorter today. But hey, I'm going to keep trying to bring the evening updates, so appreciate you being here. I'm going to push the button now. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage the ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. So, this is just me watching the Japanese indices as well. I know they got a little bit of hawkish commentary from their BOJ, but still 2.24, you know, it could be falling with the US, so we're going to watch it. Yeah, Kashkari says if jobs good, then rate is sustainable for all of 2024. Exactly. But yeah, I'm watching Asia as well, so it's going to be a big day tomorrow, folks. I'll see you then. I love y'all, okay? Have a drink tonight. You'll need it to be ready for tomorrow. All right.